every year when I do taxes and I pay, I just go to the lake and throw in a bunch of tea, reminiscent of the Boston Tea Party.
Tea Party.
I don't really do that, but
The
I feel like it.
I feel like we need to end on a brighter note.
All thoughts and opinions shared in this recording belong to the participants. This podcast is meant to inform and educate and should not be seen as solicitation or endorsement for business.
Welcome to the Market Moment. This is Matt here with Lee.
Good morning.
And John.
Good morning.
And we're going to talk about taxes today. So super boring day on the podcast. But
everybody's shutting down.
Tax day is next Wednesday, so April 15th. So we just thought we'd circle back. We talk about a lot of this kind of in one of the podcasts at the end of the year, beginning of the year, every year. But I thought we'd circle back to this with a week left to go before the tax day. So just talking through some kind of key tax deadlines and highlights there with some historical charts on some other things we're going to get into. Before we jump into that, any updates in the Mackey or Martfeld households?
No. Good Easter weekend.
Yeah,
everybody was hoping you'd say no. So
Yeah.
Basketball's over. It is Masters Week.
Oh,
His
it
Masters,
is Masters
championship
week.
was last night.
Yes.
Good game.
Great game.
Both teams played
I mean, it's
well and hard.
it was like a football game. I mean, physical,
yeah.
but it was fun.
I can't watch it. I'm still sore from Arkansas losing, so
Yeah.
I couldn't watch it.
But Easter was this weekend,
Yeah.
which was and is always awesome. So it's fun getting to celebrate that with all of our
It was nice.
church family
Yeah,
and everything.
absolutely.
Everything. So that was good.
Yep.
Okay, so jumping into today's topic. So next week, tax day, there are still things that we can contribute to, things that we can do for 2025. As many of you probably already know, but just want to kind of go through a few reminders. There are still contributions and things that can be done that can still be counted for 2025. So, Lee, what are the first things when you think about, we're a quarter into 2026, but
Yeah.
what are the things that come to front of mind when you're thinking about taxes and still applying it for last year?
It's typically IRAs. Can't really go back and make contributions to 401ks. Can you? Mm-mm. Yeah, I didn't think so. As soon as I said that, it sounded wrong. IRA contributions, HSA contributions. Those are the ones that jump out at me that the IRS gives you until the tax deadline to do for the previous tax year. That's the low-hanging fruit.
Yeah,
that
so
I think
Roth IRAs, traditional IRAs,
Yeah.
SEP IRAs, HSA contributions.
Mm-hmm.
I just made mine last week. A lot of people kind of wait to see, well, where am I going to be from
Correct.
a tax perspective? And then, am I going to owe a lot and have enough cash to make a contribution or whatever? So, they give you some leniency and some flexibility there, going into the next year to still count it for the previous year.
And typically it's on the contribution side. It's not on the expense side. It's, so you can't make charitable payments. You can't make charitable contributions. You can't pay extra mortgage,
Right.
for interest, in 26 to count for 25. So it's typically
and there are
in some type of contribution account.
There are certain things that you have to have done by the end of the year,
Sure.
right? Like RMDs or qualified charitable distributions, or
That's correct.
so it's not overly confusing, but there are some little rules, and certain rules apply to certain things, and they're different. And so you do want to just make sure you're on top of what your situation is, what you're trying to do, and what specific deadline applies, because it can be easy to think like, certain things are allowed up until tax day, and you might just wait, but that particular item might have a calendar year.
That's correct.
Expiration. So
Speaking of taxes, I'm curious how many people have seen the positive effect of the new
I don't know.
tax rules.
We should. I bet we get more data on that over the next couple weeks.
I think it'll be good, and I think next year is even going to be better. Or this year, for when we file next year, especially for our 65 to plus people, it's going to be a lot better story. But I was just curious about that. I've had a few people.
The few clients that I've heard from, and it's a handful.
Yeah.
They're paying more.
Okay.
And that could have been just specific to their situation. But going into this year, everybody was talking about the refunds were going to be larger. But yeah, I think that by summertime we'll probably be getting the data out there, but I haven't seen anything really to tell me
Earth shattering one way or the other.
Yeah.
Well, along those lines, on taxes, and if people are paying more, paying less, getting more of a refund. I thought this chart was interesting. So this shows over a century of tax rates. So this goes back to 1920. 1920. And it just shows the average top marginal income tax rate in the United States, and then it shows the chart, the top, the line graph of where it's been over time. What this doesn't get into is like what are the dollar values associated. So there's some discrepancy. It can be a little misleading just looking at this. But if you just look at the highest marginal tax rate, currently it's at 37%, which historically is
below average.
Is not the lowest it's been, but is well below average. The historical average, believe it or not, is 57.8%. Because we went through a period where they're in the late 30s, 40s, 50s, 60s, 70s, where it was 70-80% plus. And it's been really since 1980. Several significant drops, and has been relatively flattish since then.
Yeah.
So any thoughts on that?
I'll just thank President Reagan.
He got us at least headed on the right track.
In the right track, yeah. It's hard. It's going to be hard to get it back up to those 80% levels, I would think. But, I'm sure people will try at some point.
Yeah.
But, look at the chart. It's just amazing. Reagan's era it started, and we, since then we've been really lucky to be. We complain about taxes all the time, and when you look at where your tax dollar goes, that's where my complaint comes in. It's not that we pay taxes; it's that where is it going, right? And I'd love to know more understanding of where it's going and have more accountability for our dollars, right? Because I think that's the mess up. But the rates, they're actually favorable in going back 100
What's crazy
years.
is they're so complicated now. With you have the highest marginal rate. But then you've got state and local taxes, and I know now there's a bigger federal deduction for that. It's up to $40,000 now, but still you got state and local taxes. Then you have higher income earners. You get into like AMT taxes and net investment income taxes and things that can take that 37% and start stacking, on higher, and you can easily get into the 40+% range.
City taxes. You have gas taxes. You have. There is, I would guess, the highest taxed states like California, Washington, New York, all those states. If you're the higher earner, you're probably paying 70% on some of your dollars, not every dollar, but I'm sure it gets up to that level.
You mentioned Washington. Washington's always been a state income tax free state.
Yeah.
They just in their first time in their state's history passed an income tax.
I know, and it's rough.
Over
$1
million of income is taxed at 9.9%.
Yeah.
I think that's the rate.
It's rough. And now most people out there don't feel sorry. I know this is the truth, right? Most people don't feel sorry. Oh, you're making over $1 million. Boo-hoo, you have to pay 9%. But the problem with that is that a lot of business owners, that's where that range hits the most, and they will leave. That's the problem, right? It's not that.
Or Howard Schultz, as soon as it passed, he was like,
I'm out.
We'll be in Florida.
Yeah. That's the problem. It's not just like, tax the rich. That's the old thing, and it's the evil rich. But the evil rich are the ones paying a lot of the bills, right?
Yeah.
So if you overtax them, they leave, and it creates a vacuum. And
I think
I
saw a stat that I may butcher this, but it was something like California has like 250 billionaires or somewhere in that range, and it was like they pay half of the state's, income taxes, 50%. And so if you start having, and maybe it was more than 50%, but you start having. If you have 20 of those, it's like talk about having some state budgeting issues,
which they already have.
Yeah.
Which in those states are trying to be clever and creating like if you leave, you got to pay taxes to leave. Yeah. Which I'm sure that'll go to the Supreme Court if they actually try to do that. There's no way they can get away with that.
It's insane.
You can't leave our state type of thing. Like,
you owe us money. If you leave.
Hey, I have an answer to your question on refunds.
Yeah.
The average refund, according to IRS data, through the end of March, 89 million returns have been filed by then.
Yeah.
About half.
Yeah.
The average individual is getting a $350 more in refunds than they did.
Okay.
They said the average refund this year for the individual filers is $3,500, up from around $3,200.
So it's up about 10%.
Yeah.
Which can, I mean,
Yeah.
obviously it can
That's
make a
not
difference
nothing.
for some people. It'll make a difference.
Yes.
Yeah, that's interesting. I think next year will be a little bit bigger because you have the full year of, the deductions.
The thing that I've gotten, the question or the comment I've gotten so much is, how high the standard deduction has become. I had some clients in the office yesterday that were asking the questions of, we're married filing jointly. We take the standard deduction. Their charitable contributions that they've made up until this point, they don't really get the benefit of.
Yeah.
But this year,
They do with God. that's important.
Yeah. We still encourage charitable contributions, even if they're not.
I don't even know how to. Okay. But with this tax year.
Tithing is biblical. Let's just put it that way.
Yes. Anyway, with this tax year, they are now allowed to take up to $2,000 in charitable contribution deductions, in addition to
Yeah,
the standard deduction.
Crazy. I mean, I say crazy high. I wish it was higher, but especially for those 65 and older. I mean, the standard deduction, it's got
$35,000, $36,000.
Yeah.
and yeah, but our taxes are just so complicated. I saw,
too complicated.
We're starting to get a lot of clients' tax returns back, right? We ask
Yeah.
for everybody's tax
Yeah.
returns so we can do tax
Yeah.
planning, and we got to have something to do to keep Will busy. So we ask for a lot of those, and you get some, and it's like, this is 93 pages long.
Yeah.
Yeah.
It's like if you have a business or if you have any, it doesn't even have to be
crazy.
overly complicated. And you're
It's
like,
it's a small book.
this
It
is insane.
It's insane.
Yeah. Over my pay grade.
Yeah. So
It's insane.
So along those lines, so we're talking about taxes, planning. We're kind of all over the place. But one of the easiest ways to reduce your taxable income and tax burden is making sure that you're contributing what you need to be contributing to your retirement plans, whether you're a business owner or a lot of people, especially around here, corporate America, Walmart, JP Hutt, Tyson, all the vendors around here, making sure you're contributing as much as you can to your 401k. Definitely getting the match. Hopefully you can max that out. And this chart that we're going to throw up here is just this just goes back to 2006, which is pretty crazy. So 20-year chart, and shows the max employee 401k contribution limit, for each year. If you go back to 2006, it was 15,000, right? And so now it's at 24,500 for 2026. So that's great. I say that not like shocked. I'm glad they've consistently increased it. So it's significantly higher than it was, 20 years ago. So
if you're old like John and I,
you get a little catch up.
And then if you're 60 to 63,
It's like a special catch-up.
You have a special catch up,
For
for
spicy
those.
ketchup.
Which the catch-up, is it all of the catch-up after 50 or just the 6 that has to go to the Roth? I think it's after 50.
It's after 50.
Yeah.
So the catch-up has to go to Roth now. So.
Correct.
Which is also like forcing you to do the right thing, sort of. But anyway.
Yeah.
I say the right thing.
Just
but,
something worth looking at, making sure you're maxing out. Different people do it. If you get a bonus, sometimes people take a big part of their bonus, and defer that and max out the Just make sure you review and know where that money's coming from, and that you get to the end of the year, if you have the income and you're able to, that you're maxing that out. Meet with your advisor, talk about, should that be going to your Roth or traditional, what's most effective for you. But
to your
have a
point,
plan.
We'll have people, whether they're in the office, whether they're, we see them at church or at a basketball game or whatever, complain about taxes. We pay too much. What can I do? Well, these are some easy things.
Yeah.
You don't need to go to necessarily a CPA to realize, hey, if I contribute more to my 401k, that's, for every, if you're in the 30% tax bracket, for every $100 you put in, you're saving $30.
And unfortunately, the way our tax system is structured, if you are a W-2 employee, you don't have a lot of options to reduce your taxes.
Correct.
Other than making
don't.
deferred contributions that defer income, or whether it be an HSA, 401k, charitable giving, those types of things. But outside of that, you're not. We have a lot of people that come into the office. They're like, "Hey, I want to pay less in taxes. Make a ton of money, great income at Walmart or wherever it may be." But all they have no business, no other, and it's like, not that there's no planning. I'm not trying to say it's not a good question, something to explore.
Right.
But it's like there's no silver bullet of like,
Correct.
well,
And
if we just pull this lever, then we can significantly.
And if you're a W-2 employee, there's not a lot we don't have a lot of levers to pull.
Yeah,
I
that's
mean,
literally what I just said.
Yeah, yeah.
It's okay.
Yeah. You two keep saying the same thing. I would say that if one thing we can help people with is the long-term planning for taxes, right? So if somebody comes in and says, hey, I want to pay less taxes, and there's not many levers to pull. So we can look at like long-term things. I think people miss out on the options they have.
Not getting too focused on just this calendar year. Like, how do I limit? Like, don't set
lifetime taxes is a different story.
100%. Yeah. Anyways,
can both spouses make HSA contributions?
they can't. No, I mean, not if you make the family.
Okay,
Yeah.
you're limited to the family max.
Yeah.
Okay, $8,550.
That's for 2025.
Okay.
Yeah. Anyways, any other tax related? Please say no.
I'm
Please
keeping
say
my
no.
mouth shut.
Yeah. No, it's kind of a depressing time of year actually with the tax day around the corner. I have like anxiety in late
from
April,
March.
just because it's like, and then once it gets past this, it's like,
You know
okay,
what?
cloud lifted over.
There's a date, that the average American works up until mid-May.
Just to pay taxes.
Their taxes.
Yeah.
That date keeps getting closer and closer to the summer months.
Yeah.
Where you work all the way up until May the 20th to pay taxes,
Yeah.
and then basically everything from that forward is yours to keep.
And again, it goes back to just every year when I do taxes and I pay, I just go to the lake and throw in a bunch of tea, to reminiscent of the Boston Tea Party.
Tea Party.
I don't really do that, but
The
I feel like it.
I feel like we need to end on a brighter note. Lee's comment just got super depressing.
Sorry.
Yeah.
Hey, well, think about it. We're already at close to April 15th, so we've almost paid the IRS.
That's correct.
If you haven't lived on any of your money till now, you're almost out of the woods.
Yeah. Well, anyways, talk to a CPA. Do your own research. AI has made it a lot easier to just get some basic questions answered. In terms of like, hey, if you just have some things that you need clarified, I wouldn't necessarily completely rely on that. Make sure you kind of verify whatever responses you get. But if you have tax questions or deadlines and you want to confirm, Chat GPT and some of those places can be a great place just to go confirm some of that. So, so happy tax day to everybody next week. Hope you guys enjoy that. Anyways, I think that's all we've got. We're going to try to, I know you guys had a great guest on, Stephanie from JP Morgan last week. We're going to have a few more guests.
I think she's been on 4 times. I think I said 3, but I think she's been on 4 times.
She was pretty awesome, and the AI conversation was good, was great. In fact, I'm going to try to follow her now and kind of get her information ongoing. It's pretty interesting. Good stuff.
So we're working on getting some other guests on here because we always like to have guests, and they always bring a lot of value and good content. So
probably more exciting than us, I would guess.
Probably so.
Yeah.
Well, as always, we appreciate you guys watching and listening. Be sure to check out Eli's Data Brief. We've got more new content coming out. For those of you that are clients, we're starting to send out a monthly newsletter. Erica sent out the first one last week, so be on the lookout for that. That's content coming from Will Martin's our Director of Tax Planning, John, VP of Investments, Eli, VP of Planning, and Isaac, our VP of Insurance. So specific kind of points and updates on different parts of the market, the economy, planning, and taxes. So a lot of good information there, so be on the lookout for that. But if you have questions, shoot us an email, give us a comment, like, subscribe. We appreciate you guys, and we'll look forward to seeing you next week.
Have a great week.
The hosts of the Market Moment podcast are employees of Mach 1 Financial Group, LLC. Mach 1 is a registered investment advisor located in Rogers, Arkansas. A copy of Mach 1's current written disclosure brochure is available through the SEC website and available at disclosures.mach1fg.com.